Good morning, good afternoon, good evening, traders, wherever you are in the world. I hope you're doing well. I hope you're safe. I hope you're healthy. I hope you've got a big smile on your face, and I hope you're catching pips as usual. Pips of Persia here. Today's video is going to be very different to what we normally speak about. Today, we are not going to be doing any chart breakdown or any analysis on the actual charts. Today, we're going to be speaking about something that's much more important than the actual strategy of trading, which is your trading psychology, being able to have your emotions under control. If you do enjoy this video, and if you do enjoy the content that we normally post on this YouTube channel, do make sure to press the like button down below. Do make sure to subscribe as well. We've got a lot of new content coming out for all of you to be able to help you elevate your trading game. But what we're going to be actually speaking about today is not only some do's and don'ts in regards to trading psychology, but also practices that you can do on a day-to-day basis, activities that you can do that will help you with the growth of your mindset, being able to have your emotions under control. We'll also be speaking about what resources you can use for your independent study. Before we get into do's and don'ts of trading psychology, it's quite important to know, why is it that you have to care about trading psychology? Why is it that you have to care about your emotions when it comes to these markets? The bottom line is, majority of the traders focus way too much on what strategy am I learning, who am I following, what signals am I taking, who are my mentors, etc, etc. And as important as that could be, they get very distracted from trading psychology. That's just as important. Strategy is easy. You're drawing a few lines on a chart, but if you haven't got that emotional control to not have to risk more, to not get stuck in that gambler's mentality, then it doesn't matter what strategy you're using. You will continuously lose. There's a lot of hype in this industry, which is something that I'll speak about on another video at a later date. A lot of get rich quick, kind of ideas in regards to this industry. And if that is what you are focusing on, then that's completely wrong. So do make sure to take on board what I'm going to be speaking about in this video. Take as much notes as you have and apply the type of concepts that we're going to be speaking about. So let's jump straight into it. Some do's and don'ts in regards to trading psychology. The next 10 points that I'm about to mention, I'm not going to take credit for them. They come from an individual by the name of Barry Burns. So, credit to him. I'm going to leave a link down in the description if you want to read this in your own time. Only one of the points I have changed ever so slightly, but all the next points are some extremely useful points in regards to your trading psychology. So let's jump straight into it. Point number 1, do not chase a move. Meaning what? There's a lot of traders that might have a certain, let's say, analysis, certain markup with, for example, as an example, a 30 pip stop loss and a 90 pip take profit. And maybe you forget to set alerts, or maybe you just don't check your charts regularly enough for you to know exactly when to enter. Next time you check it, the trade has already gone 30 pips in profit. So it's come to your entry and it's gone 30 pips in profit. The emotion that a lot of traders will experience at this time is fear of missing out, because you don't want to be seeing this trade get away from you without you profiting from it. Now, this is where a lot of traders make a huge mistake, which is they think to themselves, ooh, if this trade is already 30 pips in profit, that means it's got another 60 pips, for example, to go. My risk is 30 pips and reward is 90 pips. So tell you what, I'm going to actually go ahead and enter it now because I want to catch those 60 pips. If your risk is 30 pips and your reward is 90, and you're now entering 30 pips late, your risk is going to be 60 pips and your reward is going to be 60 pips. You've all of a sudden gone from a 1-to-3 risk to reward ratio to a 1-to-1. And when you continuously do this, you are putting yourself at a mathematical disadvantage. So never ever chase a move. Don't have this fear of missing out. If you feel to yourself, oh, the trade has already happened, should I enter? Should I not enter? Stay away from these scenarios. Do not chase a move. There's always a trade round the corner. Number 2, do not trade in choppy markets. Now, this may not necessarily apply to every single trader and every single, let's say, trading strategy, because in certain trading strategies, we literally analyze the choppy markets. We depend on them for our entries. If you have seen the previous videos that we have posted, a lot of them are analyzed during the consolidation period of the market, right? But generally speaking, as a new trader, forget about the choppy markets. Markets are 80% continuation and 20% reversals. So majority of the times, you want to be trading, practically all the times, you want to be trading continuations. If the market is going up, look to buy it. If the market is going down, look to sell it. We'll speak about this at a later point as well. But when the market is going sideways, as a new trader, you're not going to have much idea of where this market is going to necessarily go, unless you have a strategy that specifically works for choppy markets, for consolidation areas. So my recommendation would be stay away from them until you have more experience trading these concepts and these markets, because during a choppy market, it's practically guesswork. And once you guess and lose a couple trades, you get stuck in this emotional spiral and emotional cycle, which again, I'll speak about a little bit later on. Number 3, do not trade against the dominant energy. This is what I was mentioning at the previous points in regards to market is 80% continuation and 20% reversals. If you see constant higher highs and higher lows, and you see that the order flow is generally bullish, why would you want to sell against that? Or the order flow is generally bearish, why would you want to buy against that? Yet again, advanced traders or people who have been trading these markets for a longer period of time, they have certain strategies and methodologies for them to be able to counter trend trade the correct way. But as a new trader, don't do it. Stay away from scenarios that you are counter trend trading. Go with the order flow of the market. If it's generally going up, look to buy it. Generally going down, look to sell it. Number 4, bit of an obvious one, but do not over leverage. You should never risk more than what you are willing to lose. This will never work in your favor. The cycle that people get stuck in is maybe they lose 1 or 2 trades, and then from there, what ends up happening is they say, let me increase my risk ever so slightly on the next trade for me to make back my losses. They think to themselves, oh, if I have lost 2, 3, 4, 5 times in a row, surely the next one I'm going to win. Research this in your own time. Gambler's fallacy. I'm not going to speak much about it right now. Just because you've lost a few trades doesn't necessarily mean the next one is going to be a win. Who said that? Never ever over leverage. Always stick to your correct risk management, depending on the risk management that you have been taught. We normally, teach 1 to 3%, 3% maximum of your account, 2%, 1% after a certain point, 0.5%, 0.25% or less of your trading account per every trade that you take. So never ever increase your risk under any circumstances. You can use the position size calculator by MyFX book to calculate your risk. But again, quick disclaimer in regards to that, for certain brokers, certain brokers might have different contract sizes, which will make your risk management and lot sizes very different to what MyFX book is giving you. So please do make sure to always double check that. But for normal foreign exchange pairs, it's quite a good calculator to calculate your risk. But again, do your own research to make sure that the figures that is given out is valid and it applies to your specific trading account. Number 5, do not trade for the action. This is not a sport and not a game either. This is a business. Treat it like one. So don't execute trades because, I just want to make some money, or because I feel like it's going to go up, or I feel like it's going to go down. There always needs to be steps that you take before executing any given trade. Treat it like a business. One way to look at it is, in this industry, you're both the employer and the employee. As the employer, you have to make sure you set your own set of rules for the employees to follow. And as the employee, you have to make sure you follow those set of rules. So make sure to follow your specific set of rules. This is a business, not a sport and not a game. Number 6, do not trade when you're emotional to recover losses. You might have lost a few trades, so you're feeling very angry, you're feeling very scared, you want to make back these losses. Again, emotions are going to be affecting your judgment. That is going to be the reason why you over leverage. That is going to be the reason why you don't stick to your trading style, to your trading strategy, which will indeed result in losses. So do not trade when you are emotional. Close the laptop, stay away from it, work on your psychology, maybe listen to some personal development, do something that's going to recharge your brain, and then approach it with the correct mindset. Number 7, do not get egotistic. The mistake a lot of traders make is, after maybe 2, 3 weeks or months of education, once they win a few trades and once they grow their account ever so slightly, they think to themselves, I have a proven strategy, this definitely works, I am good for life now, I'm going to compound my account and I know everything I need to know. And they might start to win for the next few weeks after that, but eventually they will hit a brick wall and that will stop them from their future success. Never let your ego get in the way. It's human nature to be egotistic. That's fine. After you win a few trades or after you achieve something that maybe a lot of people haven't, it's very natural for you to feel proud. But that should never turn into ego. You should never think to yourself that you have beat these markets, because if you do, believe me when I say $6.6 trillion a day will indeed slap you in the face, and it will hurt a lot. Number 8, do not place your stop losses too close. In this channel, maybe you see a lot of trade examples that are very huge risk to rewards or very small stop losses, sub 10 pips, sub 5 pips stop losses, right? That doesn't necessarily mean go out there and for any trade that you take, put the smallest stop loss just to get the best risk to reward ratio. Understand that hundreds of hours have gone into perfecting our craft for us to then be able to have insane risk rewards, for us to then be able to have very small minimal risk trades. Don't expect this to happen very quickly in your journey. The biggest advice that I can give you in terms of where to place your stop loss, think to yourself, if I'm going to be selling the market over here, where does this have to reach for my trade to be invalidated? Chances are it will be a structure point on a previous trend. So put your stop losses where it makes sense, not just close enough so you can have a larger stop loss, so you can have a higher risk to reward ratio. Do not place your stops too close. Go based on the structure of the market or whatever else your specific strategy is teaching you. Number 9, the opposite. Do not take profits too soon. There's this saying that to an extent I disagree with, but I'm going to say this saying is incomplete. And that is a dripping tap will fill the bucket. As true as that may be, the part that's missing from that statement is that there's a little hole in that bucket. So is the dripping tap necessarily going to fill the bucket? If you're constantly taking profits too soon, you're saying to yourself, okay, this trade now is in profit, I'm not going to go broke taking profits, and you keep taking these profits earlier than you should. It's going to affect your risk to rewards. So sometimes it may happen that your stop losses are going to cause you to lose more money than the profits that you have taken early. If your trading account is going to be that bucket, there's definitely going to be small holes in there. And these holes could be the commissions that you pay for the broker, the spreads, the swap fees, whatever it may be, and the losses that you experience. So you always do have to make sure your average win is always bigger than your average loss. Sometimes this doesn't happen by taking profits too soon. If you have analyzed the market in the correct way, then you don't have to continuously worry about closing your profits too early or closing your trades too early. You can just monitor the trade, break it even, maybe move stop loss at the times that it makes sense. Again, don't be moving your stop loss too early. Go based on what you are taught in terms of exit strategies or break-even strategies within your specific school of thought. But don't take profits too early. Let the trade play out. Unless you start to see very clear reversal signals. It so happens that some of the trades that I take, I always execute my trades with a stop loss, but sometimes without a take profit. Some of the longer swing trades that I'm looking to catch. And I monitor the trades, monitor the charts constantly. Not every single minute or every single hour, my phone in my hand, checking my MetaTrader 4, mostly looking at TradingView, mostly just monitoring the charts and see if I am going to get any reversal formations. If I'm looking to buy the market, if I start to see distribution schematics form, then that's when I want to take my profits and get out of that trade. So have your take profit, let the market go to your take profit, leave it to do its thing. But that doesn't mean don't monitor the trades, and that doesn't mean never move your stop loss or never manage your trade. No, that's a whole different thing. Do make sure to manage your trade properly. And finally, number 10, this is a do statement, not a don't statement, okay? Pay close attention. Do guard your capital. Think of it as a spectrum. On one end of the spectrum, you have been extremely overprotective of your capital to the point that you're scared to execute trades. You're scared to take on board the risk. Fear will affect your analysis. That fear will affect your future trading style, resulting in further losses. On the other side of the spectrum, you've got being too loose with your capital, not caring too much about that capital. And if you are too loose with the capital, then indeed every trade that you take, you're not going to care about the outcome. You might not even care about the risk. That's going to stop you from analyzing the markets the correct way and being able to be in control of your emotions. Find the sweet spot in this spectrum. Don't be way too overprotective of your capital. Don't be too loose with it either. Before we move on to further resources that you can study in your own time and a little challenge that I have for everyone watching this video, let's firstly speak about activities and practices that you can do on a day-to-day basis, or something that you can do once and it will help you for the rest of your trading journey, provided you do it correctly. Personal development is going to be the first thing I'm going to speak about. If you genuinely want to make it in this industry to the point that you want to become a full-time trader and have, your income from this industry, which is something that I believe is possible. You saw the disclaimer at the beginning. Everything in that disclaimer does apply to the stuff that I'm saying right now as well. But I disagree with individuals who say you cannot become a full-time trader. I disagree with people who say that you cannot make money in this industry. Of course you can, provided you follow a correct blueprint step by step. If you do genuinely want to become a full-time entrepreneur or a full-time trader, then personal development should be an activity that you do every single day. Every single day you have to be growing your mind, growing yourself as a person. One of the audios that I really like is The Strangest Secret by Nightingale. I'm not going to speak too much about the resources for personal development just because there's an abundance of them on YouTube, on Google, everywhere. It's enough for you to do a few searches for you to find a personal development mentor for yourself. Find someone that you love listening to their work or reading their books or whatever it may be. But make sure every single day, grow yourself as a person. Focus on personal development. And I don't want you to passively read or passively listen. I want you to actively listen and actively read, and do this on a daily basis. Affirmations is just as important. You have to affirm what it is that you want to achieve. Write down your I am statements. You can write it as I am so happy and grateful now that, but I recommend just do I am with a description of who you want to become. I am wealthy. I am healthy. I am in control of my emotions. I am organized. I am whatever it is for you. One of the biggest advices that I can give you is around your room, around your house, around your apartment, around your place of work. You want to constantly remind yourself of what you want to achieve and what type of person you want to become. In the morning when you wake up, you want to just be able to look around and constantly see affirmations, constantly see positivity around you, constantly see things that is going to elevate you, that's going to motivate you. So it could be the background on your phone. It could be wherever there's a mirror, wherever there's glass or whatever, you can write your I am statements over there. So as you're walking around your room, your house, your apartment, your place of work, whatever it may be, you're constantly seeing these affirmations. You're constantly seeing the person that you want to become. And every morning that you wake up is going to put you in a much better mood. That's going to help you with grinding more to get to where you want to become. That's going to help you from becoming that person quicker. Don't take this lightly. This is teachings of individuals who are making life-changing money on a daily, weekly, or monthly basis. Please do not take this lightly. Make sure you constantly have your affirmations around you. Make sure you have your vision board. These are extremely important. And where it is that you normally sit down to analyze your charts, where it is that you normally sit down to execute the trades, have a promise piece of paper that you can look at as you're analyzing your charts, as you're about to execute your trades. What does that mean? It could be, I promise to myself, ... sign it, put your name and a date on it, and now after that, put your set of rules as a trader. I promise to not execute trades if X, Y, and Z is happening. I promise to only execute trades if whatever it is that your specific strategy is teaching you, whether it be day of the week, time of day, certain indicators that you use, certain patterns that you want to use, whatever it may be. Make it very, very personal to you and your specific trading style. And whenever you're about to analyze charts and execute trades, have a look at it and think to yourself, is the trade that I'm about to execute matching everything that I have written over there? Because you've made a promise to yourself and you've signed this with your name and a date on it. Now that's going to stop you from taking trades that's not matching your set of rules, from taking trades that are emotional based trades. The final thing that I would say put around where you can see is the reason why you want to make it in this industry. Think to yourself, why is it that you want to make money in this industry? Why is it that you want to maybe become a full-time trader? Don't think just money reasons. Don't think, oh, just because I want to buy a car, I want to buy a house. Think deeper. What are the exact reasons why you want that money? Could be maybe you want to quit your job, maybe you want to open charities, maybe you want to help your loved ones, whatever it may be, and have pictures of that around your place, around your trading desk. The reason I say that is because if you're about to take a trade, and if that trade is going to be a mistake, it's going to be an emotional trade or a trade that doesn't match your set of rules, by having a look at your reason why, it will stop you from taking that stupid trade. The reason behind that is because now you realize that you're doing this for a lot more than just yourself. Now, resources that you can study in your own time. Mental Fitness for Traders, a very short yet very useful read that will help you a lot with identifying emotional mistakes and getting them under control. Trading in the Zone, yet another beautiful book that will talk about a lot of different factors, but it will help you with the growth of your psychology, trading psychology specifically as well. One of the best books, in my opinion, ever written in terms of personal development is Think and Grow Rich. Make sure to read these and make sure to read them regularly. Make sure to take notes, take ideas from them and put them next to your affirmations around the place that you live in, around your room, your house, your apartment, whatever it may be. Remind yourself of the concepts that you learn from these books, from these resources. Don't just read it once and forget about it. That's not going to work. Now, here's how I'm going to wrap it up. You are your biggest enemy in this industry. You are the reason why you will or you won't succeed. There's a lot of hype, a lot of noise, and a lot of drama in this industry. It's your decision whether you want to give into the drama or not. It's your decision whether you focus more about, this person tweeted that person put this story up, this person put this post up, more than the actual skill, more than the actual psychology. So my biggest advice to you would be cut down the noise. If you're following individuals on social media and more than getting value from these individuals, you are getting negativity from them. They constantly be speaking about who is or isn't a real trader, or speaking about concepts that we know is definitely not going to be paying you. Unfollow. Get rid. Understand that you're doing this for much bigger reasons. It's your financial future we're talking about here. You need to be fully focused on it. So get rid of the noise. Focus on your grind. Focus on the stuff that will indeed elevate you every single day and help you on a daily basis. And here's the challenge that I have for every single person watching this video right now. Set yourself a 90-day challenge. From whenever you feel like you can commit to it, start the 90-day challenge, and for 90 days straight, every single day, you're going to be developing yourself as a person, even if it's half an hour listening to an audiobook. And see the difference for yourself after 90 days, just 3 months, and you will be shocked. With that being said, I hope you all have been taking notes about the concepts that we've been speaking about in this video. If not, make sure to watch it again and take notes and apply. It's about who applies these concepts that will be making the money that they want to be making or reach the success that they want to get to at the end of the day, right? But if you have gained value from this video and from the other videos that I have posted, then do make sure to press the like button. Do make sure to subscribe as well. We have a lot of good content that one by one I'm going to be recording, one by one I'm going to be bringing out for you all, helping every single one of you elevate in this industry, getting rid of some of the myths and some of the stupid mistakes that people make in this industry for you to get to where not only you want to, but where you deserve. Have a great trading journey. Peace.